We are coming off of a jam-packed week when it comes to inflation reports that were released for the month of February. So let's jump right into all the economic news and updates that you need to know for the week of March 11th through the 15th. Now, starting off the week on Monday, the one really interesting news that was released was the fact that the BLS actually told us a little bit more about what goes into calculating shelter. Now, I recently made a quick 1.5 minute video about it that I linked in the description below, and so feel free to check that out if you're curious to know what exactly we found out and also why the BLS data can be so unreliable. Now, moving on to Tuesday is when the CPI was officially released. The year-over-year inflation increased from 3.1 to 3.2%, and overall inflation rose 0.44% month over month. On Wednesday, we did get mortgage application data, and friendly reminder, the reason this is always important to track is because if we are seeing an uptick in purchase applications, for example, that's a telltale sign of where demand might be and also what the transaction count might be moving forward. Purchases rose 5% last week and are down overall 11% year over year, but it's actually a few weeks of an upward trend we're seeing in mortgage application data, which is always positive, and we need any small positive news that we can get. Refinances rose 12% last week and are now up 5% from last year. And now moving on to Thursday. Thursday is when the PPI, or Producer Price Index, came out, and that measures wholesale and producer inflation, but it rose 0.6% in February. And so unfortunately, that's a little bit above what the markets were expecting. We're kind of in a place where we're still pretty far from that 2% target that the Feds are trying to get to. But with all that being said, the Fed meeting is coming up the following week. We really need to start seeing some unfavorable news about the job market for the Feds to feel comfortable enough to begin dropping rates, because they're just extremely fearful of possibly repeating what happened back in the 70s. And that was when the Fed started cutting rates too soon, and then they saw inflation rebound like crazy, and they just are trying their best to avoid that at all costs. So in summary, the rates are up due to the inflation reports coming up a little bit higher than what we were expecting. With a hotter than expected inflation report, the rates corrected up to now above that 7% threshold, ending the week at around 7.11% for the industry-wide national average. And now this upcoming week is Fed Week. Their commentary is going to be extremely helpful to know exactly where the rates might be headed in the near term.